Hey, it's Rick with your market recap for Wednesday, January the 11th. Significant positive change in my risk model. Everything is turning, it should be green, but it's blue on the screen. And so this is a very positive sign. So we'll see what happens. Tomorrow is a pivotal day. We have the consumer price data that gets released tomorrow morning before the market opens. So this could undo everything that we've gotten the last 3 days, or it could be a catalyst to propel this higher. So we just have to wait and see. I lightened up on a few things today just in anticipation of just to reduce the risk, but we'll see what tomorrow brings. For the S&P, we're getting really nice and close to the 200-day moving average. So again, I say that tomorrow could be pivotal. If the market takes it badly, we could head back down. But this could be the catalyst that pushes us through the 200 and potentially, fingers crossed, move us into a stage where we can get into a new bull market over the next few weeks. Looking longer term on the weekly chart over here, again, we've closed, or if we close right here, spread this out a bit. Close right here. That'll be the first close, not the first close, but a close above the 40-week moving average. My sort of index investing rules say that if you have two closes above the 40-week moving average, then you should take some of your cash and put it in the market. Probably 25% for certain, maybe as much as 50%. And so that could happen as early as the end of next week. If things hold, if we hold here and then we get another close next week above this line, it would be time to put 50% of your cash into the S&P. And then the time to add the other half wouldn't be until this 200-day moving average line starts turning up. While it's headed down or it's even flat, it's just too dangerous to get fully invested because it could just roll over again quite quickly. But once we get this in a confirmed uptrend, which might take a couple of months, we could well see getting back to being fully invested. So that's positive. That's some bright light. The Qs, of course, are not as strong. They're still a long ways from their 40-week moving average and the 200-day moving average, and both of them are much sharper down. So they've got a lot more work to do. But we've had good 4 positive days here, and with price now above the 50-day moving average. So again, tomorrow is going to be pivotal. Dow Jones still continues to be above, it's the strongest of the bunch, still continues to be above the 40-week moving average. It's also above the 10-week moving average and looks poised to go higher. So that's the one index that's stronger than the others. The small caps, IWM, again, if we close here, we're now going to be closing above the 40-week moving average. It's a good sign. And the mid caps are a little stronger. This potentially will be the second close above the 40-week moving average. So in a perfect world, certainly before you get fully invested, you would want all of these indexes, the Dow, certainly the mid caps, the NASDAQ and the SPY, all above, have two closes at least above the 40-week moving average. So with only 2 or 3 of them, like I say, you might get 25% invested or 50%, but you don't go whole hog until we get some more confirmation. Toronto's pretty much in the same boat. Everything was up over 1% today, except Toronto was only up 0.5. But it appears here, again, it's going to be the second close above the 40-week moving average. It closed right at the top last week. And this week, if we hold here over the next 2 days, it'll be the second close. So it's time to start getting your powder dry, or getting ready to act and get a plan here to get invested to some degree. Okay, what else do I want to talk about? If you recall, let's go back to the Dow Jones. I remember a few days ago I said I shorted the Dow, and then equal weight I went long the QQQ. And this move has actually been, it doesn't look like it on the chart here, but it's been a little bit stronger. So that trade is working out very, very positively so far. So I actually added to it yesterday. So I'm up. I didn't risk, you don't risk anything. Oh, wow, there's always risk, but there's no cash change of hands. I short one and go long the other for an equal dollar amount. So I didn't invest any cash, and I'm up about $900 on that. So I don't know, pretty good ROI to me. But looking at the charts, there's still a long ways to close that gap. So that one could work out quite well. Just quickly looking my current positions, one of the important things about when you're stock trading is you want to get yourself in a risk-free environment as soon as you can. So that starts with buying things that are in the right kind of patterns. If you're buying right, the stock should be profitable for you like really early on, if not the first day, certainly by the second or third day. And if it's not, then there was something wrong in your premise. There's something wrong in the way you entered it, or the market just sucks. So it's one of two things really that can go against you. But if you're buying right, and the market is with you, that stock really should go up. So you should be in a profitable position right off the get-go. One of the things I do is when it starts moving up, and this CPRX is a good example. I got in down here in this downtrend line break. I booked some profit. My stop is now at break even. So what I have here is a free trade. So like it could go all the way. My stop is at this line here, which is basically my entry, is exactly at my entry point. So if it somehow comes back down here, slams out my stop, at least I booked some profit and I didn't lose anything on the back half of it. So it's just opportunity cost. So it's what I call a free trade. So you want to get yourself, and I'm in that position with several of these. So that's a good thing. HIBB, I sold that today when it had a really bad close. So I trail stopped this. You see it closed. It got very extended here. Got up and then it closed right at the low of the day. So I exited this. I think I had a trail stop up here somewhere. So this one I ended up with a 4.8% gain, but I only risked 1% to begin with. So I got 4.8 times my reward versus risk. So I'll look for this to set back up again. I think it's a strong stock in a good sector with good earnings. So this might set up again for another entry. HWM, I haven't sold any of this at all, but I've raised my stop to break even. Actually, this stop here is a break even. This stop would be a profit. So again, this is a free trade. So I don't really care what happens. I'm trying to stay in these trades longer. I've always been really guilty of selling too soon and not letting them run. Now, of course, the last year and a half, there hasn't been an environment where you've had any big runners, but that time is coming. So I got to get my brain tuned into trying to stay with these longer. So, and this really helps when you get a free trade out of it. LANC was a new trade I took the day before yesterday, and it was really a poor entry. This hadn't cleared this downtrend line. I was speculating. It was what I call an early entry on my part. And after 2 days, it's not performing. It's not going up. So I just cut half of it today and said, okay, and then left my stop, which is down here on the other half. So at least reduce my my exposure in this one. So it's pretty tiny. So again, for me, if it's not working, I cut it soon. I want to cut my losses really short. I don't give them any time. I can always rebuy it. So I would actually buy this one. I buy it back and even add more to it if it gets above $200. So actually, what is that high right there is 202. So above 202, I'd be buying this stock. But I jumped the gun here, and that was just not a good entry. Logi, again, this is a free trade. This one's moved up beautifully, totally unexpected when you look at the weekly chart. It's got some overhead resistance over here now. This is a declining 40-week moving average. Like I've mentioned before, I rarely ever buy stocks that have a declining 200 or 50, 200-day moving average. But the stock was above it at the time. But anyway, it's worked out really well. I've taken a fair bit off of this, and my stop now, I'm giving it a really tight stop because again, I don't have a lot of faith in this one getting a huge gain. So that's that. Another new position took yesterday, no, 2 days ago. Nathan's, but this one trades so thin. It's in a profit position now, right from the get-go, as I'd want. I got a pretty wide stop down here. So tomorrow I'll probably raise these stops up. The difficulty with this one, it trades like what we say, it trades by appointment. So far this week, so we've had 3 days, it's only traded 17,000 shares. So I normally would stay away from these, but I thought this pattern looks really good. And so I'm going to take a shot on this one. Not huge size, so I don't have a tremendous amount of risk. SAP is a food products company. Again, it's not going to double on me or anything like that. Decent pattern. What I expect here is that this first test of the high, it's going to get rejected somewhere in here, come back down, and then come back up again, and it'd be a perfect pattern. I won't draw it in there, but so anyway, I'd lighten up by selling half here, and the other half is my stop is at break even, which is down here. The beauty about selling half is that you're never wrong. So if the stock just blasts up, I say to myself, well, good thing I kept half. Whereas if the reverse is true, if the stock just plunges down, takes out my stop, good thing I sold half. Got some profit out of it. So you can never go wrong when you're in a good, a reasonable profit position. I mean, you have to bear this in mind with how much you're risking to begin with, but it's taking half of it off and then let the rest ride as a free trade. SJ, I got a lot of positions. They're all pretty tiny. I think collectively, my trading account is only 40% invested. So there's a lot of really small positions. So this one got me in a profitable position right from the get-go, which is what you want to see. Stops down here. This one's too new to really evaluate. TITN. Again, I haven't sold any, but I've raised my stop to break even, so now I got a free trade. So, I'm expecting this could mush around here and then take out these new highs, which would be a great trade. Or if it does come back here and takes me out, well, so what? It might set up and be another trade somewhere down the road in the next 2 or 3 weeks. And then Uri, United Rentals. I've sold 2/3 of this already. It's up right near the all-time high. I don't know why I sold this, to be honest with you. This is it's still looking pretty strong, but at least I've got 1/3 of it. as a free trade again. My cost base is actually way down here at 350 or something. So nicely profitable. So yeah, let's see what happens there. Okay, that's it. That's all. Expect some fireworks tomorrow morning. Anxiously seeing what the reaction. Doesn't matter to me what the consumer price report gives. What's important is that what's the market reaction to it. So it's either going to be up, down, or who cares, and it'll go sideways. So can only do one of the three. Okay, that's it for now, and we'll probably have another video tomorrow night.